Hey everybody, hey traders, Chris Pulver here, just after 2 p.m. Eastern Time on Monday, August 4th. Just want to send a little video update out for Pulver alerts and for A1 trading, things I'm looking at for this week. Let's just go top down. We're trading around 63.21 on the SPX. I've got a couple levels I'm watching this morning. I'm looking to see, we've already exceeded the 100% ATR, which makes like 3 to 4 days in a row that we've done that. I'm hoping that today, after even a directional day, we kind of fade back a little bit. These blue lines represent some sell options that I have in with a 63.20, 63.25 line in the sand. Hopefully price will stay below that for the day and the close to make a few bucks. I'm potentially looking to see if price will get up into the 40s and 45s. I'm still going to fade that move. The correction, in my opinion, is not done. So, pulling back this tiny little 3 1/3% is not a meaningful correction. I think if we are lucky, the market just goes, sideways and maybe kind of shakes traders out here for the next week or two. After obviously having a melt up, having a bit of a shock last week with the market dropping, gapping up Wednesday, falling Thursday, falling Friday. We're now like in between, right? You can see that we're pulling back into this gap area. So what happens next? Well, we could have this high, this low. Price is going to hang out in the middle for a couple of days, and the next real directional push is either going to be a leg lower, or potentially this 3 1/3% correction is all we get and the market tries to poke these highs. I still am cautious at these highs. I still think a pullback is needed. You go back to 2020 price action, how things pulled back about 8 to 10% from those recent all-time high hits. I think that's kind of what we're in the wake for right now. It just hasn't happened yet. So I'm not jumping in aggressively to these dips and pullbacks. I did take some stabs right here, and I'm willing to kind of take some more bites and nibbles. You'll see this in the Pulver list, the way I play some of my debit spreads and credit spreads. But if we get to the 50 period moving average, if we get back to the 100 or 200 period moving averages, it's these levels that I want to see if the market goes high to low, maybe consolidates, maybe a little bit lower low, and then it's all that support that we could end up getting scooped up. And from there, I think we do make more highs. The trickier market would be we don't make any lower low, and we just proceed to just dip right back to the highs, and off we go to fresh all-time highs. And this market might be marching towards like 66, 67, 6,800. Maybe the big number for the year is like destination 7,000 SPX. Remains to be seen. So my thought right now, at least for August and September, is that we're going to have a little bit of a sideways correction, okay? Or we have more downside this week. So either we high, low, pull back in here, market sells off for another lower leg, we find some moving averages, we find some previous all-time highs as resistance becoming support. That does offer up about a 4 to 6% correction, which I've been talking about a lot for these last few weeks. So right here, pullback window 4 to 5%, potentially 10%. Keep an eye on the VIX. VIX is now back below 18 with a high of 22 last week. So we had a bit of a spike in volatility, got up towards 2186, 2190. I think the high here might have been right around 2190 high. So, it was a good spot to sell some premium. I sold some puts last week on the SPY with a 490 and 485, and I collected $5 of income on that, so that worked out pretty well, at least for the credit side. Now I'm obviously waiting to see, that's back to April lows. It could pay really well. It could pay really easy. I'm still taking on like a naked put type risk, but that's okay. Okay. All right. So keep an eye on the VIX. Watching some, intraday levels for the S&P. If you look at this, if I just zoom in, high to low, we're pulling back in kind of that 38 to 50% zone today. Let's see what price gives us for these next couple of days. There's a high to low. We're pulling right back to equilibrium. In my opinion, I think this market, if it just goes sideways for Tuesday, Wednesday, maybe starts to roll over a little bit more. These lows could certainly be retested. U.S. labor market kind of caught the market by surprise. Trump was very vocal last week saying he's going to fire, whoever makes job numbers, whatever that means. I think it's just a bunch of noise. We have a pro-growth administration. We have a Fed that's likely going to be cutting rates here over the next few months. So September is now a very high probability rate cut. And what's interesting is look at this number here. We're sitting at 4.25, 4.5, and we're looking at a rate cut for September, 88% probability, and then another one for October, a 62% probability, and another one for December. So now the market's with a reasonable probability, looking at 3 cuts by the end of the year. I think that's good for the overall markets. I think that's still good for gold and silver. I think that's good for Bitcoin. I think that's good for risk appetite. I think that's good for small caps. So trades I'm watching right now, I'm looking at position myself with the IWM to play catch up by the end of the year, and looking to see, even if we go sideways here, we had a nice little rally. We are sideways. Maybe this is again similar where we just have some some choppy action here for the next maybe 30 to 60 days. But the catch-up trade would be we get back to these highs by the end of the year or early 2026. If we have a more meaningful pullback, again, we're right at the cluster of moving averages. If we pull back high, low, lower, high, lower, low, there's kind of a fancy technical pattern here. You could go X, A, B, C, D, and then you pull back. It's some type of harmonic pattern. We would end up looking for entries down here towards the low 200s and then trade it back up to this level as target 1, proceed to see the bigger trend prevail back to target 2 all-time highs. So Russell is becoming one of my, preferred trades right now index-wise because there's double-digit upside potential to revisit all-time highs. If we get there, that's a little bit easier than trading all-time highs, all-time highs, all-time highs on the NASDAQ and the S&P. So I do like the Russell. The premiums are pretty decent on Russell compared to S&P and NASDAQ. They're matching. I'm not going to say they're better. They're just matching. So I do like the Russell.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
For option trades, I do like taking some bites on some credit spreads and debit spreads on the SPY and the Qs. I'm hoping that we at least pull back to the 50-day moving average on the SPY. I'm hoping that we at least pull back to the 50-day moving average on the Qs. The DIA is already pulled back. We hit the 50 right here. So I'm watching that, see if we, maybe flush down high, low, lower high, lower low. Still a lot of support on the DIA around the 425 to 420 zone. So we'll keep an eye on that one. As far as Edge Finder, just go into the typical top setup, see how they score. Euro Pound, very good. S&P remains bullish. NASDAQ remains bullish. All these are good. Nikkei, we had a huge volatility swing in the Japanese yen last week. I still like, I'll just go ahead and highlight these. What am I looking for? S&P, I'm still bullish. NASDAQ, I'm still bullish. Nikkei, I'm still bullish. DAX, I'm still bullish. Silver, I'm still bullish. Bitcoin, I'm still bullish. Gold, I'm still bullish. Russell, I'm still bullish. Okay. Dow, I'm still bullish. Top setups. Scoring here in the Edge Finder, bullish is good. Okay. Neutral versus bullish. So what do I have in the top bullish category? Nikkei, and I have NASDAQ, and I have S&P. Individual currency pairs. Let's talk currency pairs. We had a huge pivot on the dollar last week. Let's talk DXY, some individual currency pairs here. DXY right at the 100 mark. We went to like 100.24. I thought we'd actually make a run up to like 101, maybe 102. We just had a hard reset on Friday. Now, I still don't think that the bottom is necessarily in, but I don't think that this is the end of a little bit of a recovery. So the dollar, in my opinion, could still pull back higher. Maybe that was just it was a really wild day actually, because I got very lucky in the trading battle that I did. I faded, which I rarely do, but I faded the dollar yen and it paid out really nicely with about a 350 pip move on Friday all by itself. But as long as this trend line doesn't break, to me, this is making higher lows for the dollar to continue to correct. And I'm hoping that smarter money, bigger money, is going to take the dollar into more of a secular bear market from a better price. So if we get like a 101 or 102 resistance zone, that is where I'd like to take the dollar to the downside, if possible. It's selling this higher at like 101, 102. So that means looking at pairs like Euro dollar, Pound dollar, Aussie dollar, New Zealand dollar. Let's take a look at those. So Euro dollar, we had a big pop to the upside. Look, here's just a pretty easy way to think about it. There's a swing from 101 all the way up to 118. That's a 1,700 pip move in the Euro dollar. Now, I don't think that the top is done, but as long as we stay below this trend line, this market could pull back in here, flounder around, and then head lower, which means the dollar gets a little bit stronger. Okay, dollar gets stronger. If bonds catch a bid, U.S. equities sell off a little bit. I'm still in that camp of a bit more of a correction in the S&P and the indexes. But as soon as the Fed starts to cut rates. Maybe this is through August, September. September 17th is the projected rate cut by the Fed. September, October, and December, 3 cuts by the Fed. What does that do to the dollar? Probably weakens the dollar. What does that do to risk appetite? Probably returns it. We'd have a bit more of a dovish policy moving forward, right? So if we get a chance to buy, let's say, 1,300, 1,200, 1,100, all these technical levels, to me, you can either go down to the smaller time frame, look for confirmation to trade these dips, or if you want to trade small, I don't mind positioning small, positioning small, positioning small, positioning small, and taking these back up to these highs. There's a decent chunk of opportunity here at all these levels for profit. I think the probability of this thing going back to the highs is fairly decent. In my stop loss area would be, truly a swing all the way back down to these lows. I don't think the euro dollar is coming back to these lows. I think if we come back into this area, that's a pretty healthy pullback. But look at the efficiencies. It'd be the 50% to 61% pullback zone. So if I wanted to dollar cost average in, keep the trade size very small, I think the probability is you scale in small trade, small trade, small trade, small trade, get back to the highs. This cluster adds up to potentially a couple thousand pips. That would be like a 500 pip move right there. That would be roughly a 600 pip move there. That's 1,100 pips. Another 800 pips, that's 1,900 pips. And roughly 1,000, that's almost 3,000 pips. Now, granted, this position is slightly even as far as reward to risk. Would I be going after higher highs? Not necessarily. I'm just kind of playing the dollar cost average game, thinking that the higher probability is if we buy in these levels, we get back to these highs before we come and test the lows. So I do like kind of fading the dollar. If the dollar rallies, I'm looking at big key levels on these instruments like euro dollar, pound dollar to fade. So pound dollar, we've had a nice little crossover. This one actually looks a little bit better since we've gone high, low, lower high, lower low. I wouldn't mind seeing pound dollar using this structure right in here to be dollar cost averaging, stop loss below the lows, trying to get back to the same highs. So if you're willing to trade small, scaling in, kind of the stop area intermediately would be around 2,700. If you want to go a little bit smaller trade size and more risk, take it all the way down to the swing low at 2,100. Again, very small trade size to do that type of trade, but I think the probability is we're going back to retest these highs. Aussie dollar, New Zealand dollar, I like these trades a lot actually. Meaningful correction. I'd still love this thing to settle in a little bit lower if possible, but we've pulled back around 3% on the Aussie dollar. We pulled back around 200 pips or so. I'd still like to see if we could pull back to like 64, maybe 6,300, and put in some levels. But if we see global trade continue, if we see U.S. China continue to work out some type of arrangement, whether it's frenemies, whether it's actually doing a deal with China, whether it's just pausing and continuing to negotiate with China, I think Australia is still a good beneficiary of that, and we'll continue to see a range trade on the dollar, which does give this posturing move in the Aussie dollar a chance to stay bid. So if I'm buying small in here, I think this goes back to retest highs. The open space in my world is getting the Aussie dollar back to like 68 or 6,900. New Zealand dollar, pretty similar. This one actually looks better structurally for me to just buy kind of at current market, buying at current market, and then dollar cost averaging down here, keeping the stop loss below and trying to trade this open space up to like 63 to 63.50. So it'd be trading small, stacking up some buy stop levels, be willing to also have some buy limits, trade this whole area and take this thing to open space at 63.50. So if I do that for the pulver alerts, they're going to be small entries, very small trade size. My stop loss will be back below these lows, but probability of getting back to highs, pretty good. I like that trade. Do I have to hold it all the way to 63.50? No, I can take profit anytime I want. If you're looking to get in and like try to confirm this, well, it's just such a choppy move that confirming could be on what time frame? Are you confirming on a 5-minute chart, 10-minute chart, and it just goes up for a moment and then fades back down, and then up again and fades back down? It's like I'm trying to eliminate noise. If I'm going to start trading this way, I want the big area to work. If the big area works, I trade size accordingly. So this is maybe like 1% to 2% risk and the potential for a 1% to 2% gain. If I want to add stacked up orders up here, I can turn that into a 3% to 4% gain and take on more profit than risk. But I have to start somewhere. So look for that on my pulver alerts for the Forex side. I do like some of these trades. A couple of the ones I would take a look at would be dollar CAD. It's right here, dollar CAD. Dollar CAD trading at 37.77. We're on the right-hand side of the trend line, but we're below the 200 moving average. I'm going to let this one get a little bit noisier. If it pulls back into equal lows, I'm probably going to take a stab here. If it pulls back into major support, another stab here. My halfway point is going to be back to around 3,900. Target 1, we'll go all the way back to highs again, 4,500, target 2. So I'm looking to buy really low on the dollar CAD. That trade is just not ready yet. To me, it's not ready. I want to see some equal lows around 3,600, and then between 3,600 down to 3,200, I'll level into that trade. Dollar Swiss, on the verge of a trendline break. You can see the failure there. If we spend some more time just going this way, on the right-hand side of the trend line, can we carve out a low? Can we make our way up to this level, have a pullback, and then have another push? I'd love to see Dollar Swiss get us into this pocket between 86, 87, 88. Nice big profit trunk right there. I'll be out of this trade between that window. So between 86 to 8,800, I'm looking to take some profit on Dollar Swiss to the upside, but I'm long in this currency pair. Dollar Yen, I'm out of that trade from last week. That was a huge reversal on Dollar Yen. It's likely still going to be something along these lines. There's a channel. Oops, I didn't draw very well. Here is a channel with higher lows and equal highs. So if this, with that big reversal on Friday, does this pull all the way back down and reset? If so, can you buy the lows, confirm this on a smaller time frame, catch a bottom here, and go all the way back up? Well, as far as reward to risk, that's a great trade. You just have to follow along with the smaller time frames. I don't love that trade, but that structure seems to be holding pretty well in Dollar Yen right now. Okay, so I think a lot to do with summer trading right now is just watching dollar levels. I think the dollar basket is kind of a key basket to watch from August, September. I'm going to wheel into kind of dollar cost average from September to December. I expect some of these moves that I'm looking at in the bigger pictures to play out. So euro dollar revisiting highs, pound dollar revisiting highs, Aussie dollar, New Zealand dollar revisiting highs. Maybe get a little bit more clarity on my dollar CAD, right? Dollar yen, I like the structure. This one's probably the tighter trade for me as far as like lower time frame, stop loss pretty tight. See if I can trade some confirmation. But the other ones I'm willing to, like I said, more dollar cost average in. And expecting the dollar index to ultimately give back some of the gains. So if we, work our way back up to the 100 mark, maybe 101, 102, I'm looking to fade those strengths on the dollar to see additional risk appetite come in the market and fade the dollar. Okay. So I hope that helps. Index-wise, just a quick recap for today. I still think the market is capable of pulling back to the 50 period, previous all-time highs, maybe having somewhere between a 5 and 10% correction. It's a perfect time of year where most of Europe is on vacation. The markets might be a little bit slow and choppy and volatile, so understand that there might not be a lot of direction, okay? So be aware of that. Could we roll into some direction into September, October with the September effect? Yes. Could we bottom out here around that time and then have a rally into the end of the year? All the above, right? So as long as we don't have like crazy direction in August, September, it's just going to be a bit of a chop fest. If we do have direction in August, September, I would suspect that it's probably easier for this market to fall a little bit and just correct. And I want to be waiting with open arms to buy some dips, take some bites, and see if we can get back to these highs. But play some of these pullbacks with some good, cost-effective risk, right? Like risk-on strategies. Okay, hope that helps. Take a look at the Pulver Alerts updates. I'll have some trades. I'm looking at futures market. I'm looking at currencies. I'm looking at indexes, options, things like that. And we'll talk to y'all soon. Have a good week. Thanks. Bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.